Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hey everybody, good morning. Hope everybody's enjoying the week so far. We do not have NFP today, just FYI, because of the government shutdowns. So obviously we're not really expecting any crazy volatility. But we'll go through some markets. Right now I'm not looking to trade anything. I know, boring, but I usually don't trade Fridays. So you guys are just going to be here hanging out with me. So going over the dollar index, right? I'm having a very hard time trying to understand where this market wants to go next. If I look at our higher time frames, right, we have all of this. We have this consolidation. We ran above this high here, and the market has pressed lower since. So here we got the old low retest. This is last quarter, right? Q3. Came up, tested this old low, rejected. Just based on candlestick formations, I would expect that this market is going to trade lower. Now, there is a risk that it could trade higher into this fair value gap here, but just based on how the last quarter closed, okay, even though it closed bullish, it still created a lower low and a lower high, okay? So that's one thing that we definitely need to be cautious about, is that this market is still in an overall downtrend. Okay, we don't have any market structure shift to the upside. Okay, we don't have a swing high being broken. And last month created a lower low and a lower high. Not only that, it closed somewhat bearish. So just looking at this currently, it for me is a very hard read because we have this pin bar here from a couple weeks ago. And it almost feels like they wanted to run above this little trend line here, and maybe they want to continue lower. But right now, this market has really been in a range for over 2 months, right? So if we count how many months this has been, 1, 2, 3, 4, 5. 5 months, it's really just been stuck up and down between this low and this high. So this here, right, week to week, is very difficult to trade. Compared with, some price action here, these are the market conditions that I tend to just avoid. I haven't been trading a whole lot of FX. I did take a loss overnight because I wanted to see lower prices from lower prices on the euro. I wanted to see lower prices on the euro from this bearish fair value gap, because it did look like we were kind of building up all this consolidation. We broke lower. But we didn't get any follow through. Now we have an inverted fair value gap going upwards. So this, doesn't make me feel very confident about shorts now. And yesterday, right, we traded lower towards the weekly open, but got a very strong rejection away from that level. So, this could be a very large AMD where we have accumulation here, manipulation outside of the range, and then if we start pushing higher, we should possibly take out this level here, and then maybe start making our way towards this liquidity up here. But again, this is probably going to take a while for this to actually pan out, if it does. So if you're having a hard time trading the dollar index right now, you shouldn't beat yourself up about it, because this is not easy to read, even for the most experienced trader. All right. For an experienced trader, though, we tend not to trade unless it's very obvious of where the market is trying to go. Okay, I was short on the dollar from here down to the liquidity below. So here, I was aiming for this target here and the target down here. Once we got that, though, I haven't really seen too much that I would have traded. All right. Here, as we traded down in here, I actually wanted to see us break below that and continue lower, but we didn't get that. So now we're stuck between a broken bullish fair value gap here and a bullish fair value gap below us. So this here, to me, gives us what probability, guys? To me, this is 50-50. All right. So when I look at this market, okay, and this is typically what I'll do, is I'll come in here and I'll flag this, right? You can flag this as a neutral color. All right. Maybe you want to use, I don't know, yellow. To me is neutral. Same with the euro. Euro, I'm somewhat, neutral. Pound, I don't have a really good indication of where these markets want to go at the current moment. So that leads me to just wait patiently on the sidelines. We'll take a look at gold. Just be patient with me. So a lot of these markets, are still trending higher. Right? Aussie dollar's trending higher. New Zealand dollar's been kind of a downtrend. So if you compare these two assets, right, you probably want to trade Aussie dollar over New Zealand dollar. And even the euro is stronger than the pound currently. So if you were to go long, you would probably want to choose one of the stronger assets. All right. Let's talk about NQ real quick. So last week, if you guys were following me last week, I can't remember what date that was. Let's check. Last Friday was the 26th. The 26th, I talked to you guys about this bullish fair value gap, right? So the 26th, we got that rejection here. And ever since then, it's been closing bullish every single day. Now, how many of you guys were tripped off sides because intraday price action is telling you it's going to go lower? But by the end of the day, it's closing higher, right? Each one of these days is closing higher. And even on this day, taking out this low and then this high, what does that give us? If you guys watch my recent YouTube video, this is an engulfing candle. So it makes the following day a very easy read. And the following day, I basically just went long during the Asian session, which I sent to my private group here. Right. And this is usually when I'm confident to hold trades overnight or to enter trades on the rollover. Okay. So here is the 6 p.m. candle. So here's the 4 p.m. candle. We have that hour gap in between the rollover period. So when Asia opens, right, if you wait till 7 p.m., we get a swing low point. So this is our swing low point because it's creating a low, a lower low, and then a higher low. And we have the fair value gap. So if you wanted to go long, right, as a swing trader, or even if you're trying to trade as a swing trader with a futures prop firm, you can do that. Okay. You just can't hold through the rollover period because the margin requirements go up, and that's considered overnight trading. But if you wait till 6 p.m., that's not considered overnight. Just FYI. All right. So if you close it at, 3:45 p.m. and reopen it at 6, it's basically you haven't left the trade really, unless it gaps really hard on you. All right, and this is usually when I'm confident placing a trade during Asia session when I have some structure like this that makes sense based off of the daily closure. So the daily closure was a bullish engulfing candle, and like I mentioned to you guys, what does this bullish engulfing candle represent? This is a market maker buy model. So if we go down to the lower time frame, a market maker buy model is what? We have this accumulation, we have a smart money reversal, and then we have all of this in here as reaccumulation. So this here is our smart money reversal. This here, reaccumulation, reaccumulation, and expansion. So each time it's pushing higher, we just get more reaccumulation periods and then expansion. So right now, because we've already traded above the previous day's high, and it's Friday, and we've already traded higher for 1, 2, 3, 4, 5 days in a row, I'd be very cautious about trying to go long right now. And if anything, we might see a run back down into where this bullish fair value gap before trying to find any long positions on the index markets. But overall, I'm still bullish on these markets, right? It's still creating higher lows, higher highs. Stream quality is poor even at 1080p. I don't think there's anything I could do to change it. Right now, it's just as high as it can go. So maybe check your internet connection. ES, very, very similar. Traded above the previous day's high. We have this liquidity here that we were targeting. Oh, and another note with NQ, right? Last Friday, I talked to you guys about this liquidity level. Just because you have a trade idea and it's going against you does not mean that you have the direction wrong. You just have to understand how long these markets sometimes take to move to this target. Okay, so let's say if you have this target here, and I'm just going to draw a target. Let me see if I could find a bullseye. Just because. Or I'll just put an I. All right, let's just say you have this target all the way up here. You have to sustain all of this and understand that, all right, if we get a market structure shift maybe here, right, because this is our last swing high that was broken, and it trades higher, that doesn't necessarily mean it needs to go there right away. But because it's taking out this short-term liquidity, does that mean that that idea is off the table? Right? We take out the short-term liquidity, it turns around. No, it just means that it's going to try and manipulate more traders into going short, right? Retrading down to this daily fair value gap before going higher. And it's the timing of when you expect these markets to get ran. All right. It sometimes takes a long time. And this is what took me a very long time to understand, is that markets are usually slower than you really anticipate. Okay. It takes much longer to move to targets than you would typically think. All right. But it's about risk management, and it's about sticking with the plan that's going to provide profitability. Okay. Just because this market turned around and starts pushing lower doesn't mean that your bullish bias is wrong. Okay. It's just the timing aspect, because it eventually does go to this level. Right. And even me showing you that bullish engulfing candle on a daily time frame, look at this bullish engulfing candle that we got here. Okay. So this was 9 a.m. We ran out short-term liquidity to the downside, printed an hourly bullish engulfing candle, and then the next hour, right, open, traded towards the low, right, didn't necessarily trade to the low, and then it turns around. So your best opportunity to go long, targeting the liquidity back here, is inside of this wick. Okay, if you can operate at the beginning of the hour, right? Let's say this candle opens at 9 a.m. But you're waiting for the equity open. Equity open opens up, and it trades lower. And I'll just show you guys on a lower time frame. So this is our equity open, 9:30, and you guys can see it manipulates lower. And this probably would have thrown a lot of people off. It threw me off, right? But then we get an inverted fair value gap right after that, heading into what? The 4-hour close. So we have this inverted fair value gap. Not only that, but we have another 5-minute engulfing candle, right? And this 5-minute engulfing candle is what? A bullish market maker buy model. Retraces to the inverted fair value gap, and then it just takes off. And it doesn't stop, right? Doesn't stop until we get to that liquidity that's all the way up here at 25.025. So again, when you're picking targets and you have an idea in mind, you have to give the market time. And you might have to stick with that idea for very long periods of time, because if you guys followed me on Twitter at all back here, I was calling for this liquidity level to be ran out all the way back here, right? And this is a quarterly time frame. Look how many quarters it took to get to that level. I tweeted about this back in 2023, I think. All right. It took almost 2 years to get to that liquidity level. 2 years, guys, before it ran to that level. Do I have a YouTube channel? I do. If you search JadeCap on YouTube, you'll find me. YM? I mean, YM, basically, we're looking at similar. All right. This market is just grinding higher. Okay. So, would you want to go short? Probably not. You know, if we get a strong weekly closure here, I would just expect more of the same next week. Let's look at gold. Gold has just been on an absolute tear. I don't know when it's going to stop. If you're an intraday trader, you know, even as a swing trader, this would have been a great market to trade, right? And we talked about this bullish fair value gap last week, right? The best time to enter fair value gaps is when the market's trading into them. And it's trading into this fair value gap. You're trying to go long and probably put your stop loss below this candle, right? Or at the low end of the fair value gap. And you're holding it for multiple days. But do you know how long is it possibly going to take to get there? You don't. So when you enter the trade, you have to have patience with it, right? And this is where most traders mess up. They're holding on to it for 1, 2, 3 days, and then they see all the intraday price action. So if you drop down to the intraday time frame, right? All this intraday price action to me is just noise. So each time the market is pushing lower, right? Short-term traders are like thinking they should be going short, when overall this market is just going lower, taking out short-term liquidity, and then pushing higher. Going lower, taking out short-term liquidity, and then pushing higher. So a lot of what you're doing is waiting inside of trades, right? Because sitting through all of this choppy price action takes a lot of mental capital. And for me, or for newer traders, you're better off just placing the trade and doing something else, okay? You don't have to be sitting in front of the charts 8 to 10 hours a day. And I told my group the same thing this week. All right. Your whole point of getting into trading is so you get your time back, right? So if you are putting hours and hours and hours and hours, you know, 8 to 10 hours a day into the charts, right? Do you really have freedom, or do you have the freedom that you want from the markets? Because for me, I trade the best when I spend the least amount of time on the charts. If I spend 1 to 2, 3 hours a day, I'm good with that, right? Because the rest of the time is just me either in a trade or waiting for a trade. So if I'm in a trade, sometimes I might be holding on that trade for a very long time. All right. And yes, you can manage your trade and get out intraday and just re-enter the next day based on where you think the market's going to go. Right. But other than that, you have to wait patiently inside of your trades, because if you entered as it's going down into this bullish fair value gap, right? How many days does it take for it to actually start moving in your favor? Thursday, Friday, you have to hold this overnight. Monday, right? It doesn't reach your target until Monday Asia session. How many of you guys are making mistakes, making tons of mistakes in between your entry and your exit? All right, I want you guys to type a 1 in the chat, because I know exactly what that's like. And I still do it. Sometimes I overmanage and micromanage my trades. When am I confident taking trades at rollover period? Usually when I have a stop loss that's at a daily level that I can trust. Okay. So let's say if you wanted to go long yesterday, just put your stop loss below the daily low, right? And you're just trying to trade intraday. Right? There's nothing wrong with just entering right at the rollover and setting your stop loss at the daily low and setting your take profit at the daily high. Right? There's a 2R. Does that mean that it's going to go there today? No. We don't know that. The only thing you do in between your entry and your exit is manage your emotions and how you're actually, the decisions that you're making that are causing you to fail in the markets. Okay. If you're flipping back and forth between what you want to do in the markets, that is a very dangerous place to be, because you don't have a plan. You sit down in front of the charts, and all of a sudden you're just trading and trading and trading, and you don't have any idea of what you're doing, right? You should be coming to the markets with some type of idea, right? If you get it wrong, then just take the rest of the day off. Like for me, I was trying to go short on the euro because we don't have a lower wick. But right now, it's already pushed past the level I wanted to see it go. Like I actually wanted to see it roll over from this bearish fair value gap and trade lower. But if I've been invalidated on the day, am I gonna go back into the market? No, because I'm not quite bullish on this market yet. It's based on the daily time frame. And my bearish idea didn't work out. So right now I'm just awaiting. It's a waiting game. And if I had this low, we're probably sitting right at 50% or right around 50%, right? Yeah, what about a short on NQ? Are you talking about NQ from the Asian range high? Or we're talking about all the way up here, right? Yeah, just to take out the Asian range low. Listen, you can come up with many different ways to trade the markets, okay? There's 1,000 ways to skin a cat. It's just whatever is comfortable with you. All right, if you see this as a lower time frame market structure shift and you want to target the Asian range low, that's what you should be doing, right? You should be trying to find an entry. For me, this risk to reward wouldn't be good because the market structure shift doesn't happen until down here. But my stop loss would have to go like all the way up here, and I would only get a one to one basically. But if you're a 1-to-1 trader, there's your trade for the day, right? If you're talking about today, right, taking out the Asian range highs to the Asian range low, if you're just a London based trader, right, if you're just trying to short it, maybe you want to put your stop loss at 1 standard deviation, right? You're getting a 1 to 1.3 risk to reward taking out the Asian range low. What do I think about the Dixie monthly engulfing that formed after trading into a monthly order block? Are we talking about this engulfing candle? So this engulfing candle, I thought it was going to send it higher as well, but the problem is that this market structure is still bearish, right? So for with engulfing candles, okay, we need to get a closure back above a swing low. Did it close back above this swing low? No. And then the next candle just completely erased that. And then this candle took out the low. Usually when you see an engulfing candle go the opposite direction, it will usually just continue going that direction. And I probably have a good example somewhere else. Here. Do you see this engulfing candle? The problem is it's occurring at a swing high. And then it turns around and we lose the low. Usually it will continue lower. So a lot of times I'm not trading engulfing candles. I'm not trading every single engulfing candle that shows up because it's really on the context. But usually if we lose an engulfing candle, it will trade the opposite direction. Now, you have to understand that every setup has a failure rate. Okay. If you're a fair value gap trader, if you just trade liquidity, if you trade Fibonacci, if you trade, moving averages, every single one of these setups has a failure rate, and you need to account for that. But most people, they don't trade like that. They trade as if, every single setup they take is going to be a winner. Okay, that is exuberance, and it's overconfidence in your trading, and you're not accounting for the fact that you could be wrong about a specific trade. Yeah, there's no NFP today, guys. No, I'd say I don't consider a closure on candle closing. or sorry, I don't consider failing on a candle closure. As soon as we breach the low, that's when I consider it failed. Because if I were to be long, right? If I wanted to be long on a monthly time frame, it should never go down to this low. All right. You have to go back through your charts and study these candles. Okay, when we get engulfing candles, it should never trade to the lows or the highs. You know, that's usually a failed setup. So here, right? Is this an engulfing candle? No, this is an engulfing candle here. So we got an engulfing candle here on this monthly time frame. This here would be my invalidation. But you see the wick, it never goes to that level, right? The next candle opens, trades higher, and then closes lower. When do I use a 1 minute inverted fair value gap? I never use the 1 minute, to be honest. I very rarely use a 1 minute. To me, there's way too much noise, and it usually leads to over trading. If I'm trying to find one trade a day, I don't need. There's honestly a lot of noise. I just never find really good setups where I'm trying. For me, I'm trying to swing markets for a lot more points than most people. Right. Plus, I don't like getting stopped out in a minute. Right. If I do all my analysis and I get stopped out in a minute, that doesn't feel good. That usually leads to over trading. And I think there will be trading a higher time frame. It gives you more time to think. All right, you're not a robot. And you're not trading with an algorithm. And if you are, you're probably not going to share it with anybody. There are automated systems. I don't know. For me, I think discretionary traders do just as well. How many orders is recommended to have open? Is it recommended to wait until they reach stop loss, take profit to open another one? Trading different assets. Well, let's talk about do scale into trades often, but usually I'm managing my stop loss. So let's say if I wanted to go short at the high, you know, after we get a run above the daily high, get a closure below, and I want. All right, and this is a 5-4 risk reward. I'm always thinking about this here as my open exposure. Okay, so here I have 1R to possibly make 5R. All right, but what happens to my open exposure if I'm able to adjust or even get it to break even? I'm not saying I would move this to break even. I'm just saying from a risk standpoint, if I'm able to move this 1R here, and let's say I wanted to go short again and add into this trade here, and now my stop loss is where my break even point is. Now I have two positions on where my risk is still only 1R. Right? But now this turns into a possible, if it goes to my target, it is actually like 9.5R. Trades on without taking on more risk. All right. And it goes the same, it's the same with trying to trade multiple assets all at once. All right. If you're trying to trade NASDAQ and gold and euro, you know, as a swing trader, maybe you want to have across all of those markets. All right, that means you could have 3 trades with full stops open. But if you're able to move 1 or 2 of those trades to break even, now you can put on more risk and allows it. Because if you get stopped out of all the trades, you're going to lose 3R. But you don't want to open yourself up to too much risk, right? And that's how I tend to scale into my trades. What do I think about the shutdown? Usually shutdowns are bullish. It's not coming out today, guys. Do I recommend staying out of the market today? I mean, to be honest, I usually stay out of the markets on Fridays. Can you guys let me know in the chat when you've had a really good Friday? How many out of I don't know, the last 10 weeks, how many Fridays have been really good price action? To me, Fridays are usually just ways. Natty, I already answered that. PO3 during. I mean, if the market is trading lower or higher during Asia, and it makes sense from a daily time frame, that's when you would trade the rollover. Because you have to think that there's traders out there that just hold through overnight sessions. They're holding their trades for multiple weeks. Do you think they really care about an hour gap in trading? They don't care about that. They don't care about all the red folder impact releases. So if they're swing trading, let's say they were swing trading, they entered long all the way down here. Right? Let's say that they entered long here. Do you think they're like managing their trade or really worrying about the trade on every red folder news event? I'm talking about profitable traders, by the way. Traders that are micromanaging in positions. Do you think they really care about all the red impact news events? That's just intraday noise, really. I wouldn't say intraday, but daily noise. Because a lot of this is just noise to them. Right? Let's say if they wanted to go long here at 23,820 and their target was at 25K. Do you think they're really paying attention that much to the calendar? When their stops are, I don't know, 700 ticks, 150, 200 points. They don't care about that. If it moves against them 100 points, whoop-de-doo. If the week is front-loaded, doesn't it make Thursday, Friday more favorable? No, not really. If the move you were looking for during the week already occurred, it makes Thursday and Friday less likely. Okay, because if you were long from last Friday, right, which I told you guys, I was looking for this liquidity up here. If it's already reached that target, Thursday and Friday become less likely. Because we've already hit higher time frame, right? How many points do I have as a stop loss? I don't have an average, guys. I don't have an average. If the next 600 points in both directions, then I have to trade with a smaller, because my stop loss is much bigger, right? And your position sizing is based off of the size of your stop loss. It's not based off of, like, you should not be going into the markets and saying, I want to use a 25-point stop loss every single day. That's unreasonable. Okay, there's some days where it's moving 25 points in a 1-minute candle. That doesn't make any sense. Your stop loss has to be based off of these candlesticks and the market structure that's in front of you. So if your stop loss should be going below a swing low point, that's exactly where your stop loss has to go. It doesn't matter how many points it is. Let's say if you're trying to trade and you want to use a daily low as your stop loss. Previous daily low stop loss. Doesn't matter if I want to put a 25-point stop loss. No, it has to go here. And I don't care how many points it is. All right, and I have a really good example. I can't remember what it's on. Oh, here. So like here, if you're trading bearish engulfing candles, let's just study these two different setups. Right? Let's just say candle and you go long at like on the retracement and your stop loss is here. And your take profit is a 2-to-1, right? How many ticks is this? 45. All right, it's 45 pips. But you have this engulf, you want to go short on the retracement, and your stop loss is all the way up here. Right? And you're aiming for a 2-to-1. This, however, is double the stop loss size. So I'm not going to just be like, I'm using a 45-point stop loss, because that's not logical. The logical stop loss goes above or below the high that was the candle. So this stops double this one, but it's the same exact trade, right? So you have this engulfing candle, and you're in. This is 45 pips, right? Maybe you're taking 10 lots on this trade. Guess what you have to do on this trade to get the same amount of risk? Let's say 10 lots is what? $4,500. This trade, how much risk you're taking? 8K. So you can't take 10 lots on this trade. 5 lots. So your stop loss changes, right? To get the same amount of risk on the markets and say, I want to use a 25-point stop loss. It's based on what the market is doing. If the market's very volatile like this, it's forcing you to trade smaller size. Just basic math, and it's understanding risk. What do I think about trading other assets? I trade other assets. And in my opinion, you should learn on one asset, 1 and 2 assets, but then you want to find other assets to trade. Because if I just look at the dollar index, like I mentioned earlier this stream, does this daily time frame, is this good for like trading, for finding really good setups that are clean in your favor, that don't chop around on you a lot? No, not really. Compared with like NQ, where this market is only going higher, or gold, where this market's only going higher, on a lot of opportunity. By forcing yourself, it's that aren't really good. These markets aren't really moving. No, if you're scaling in, it all depends on what the market structure is allowing you to do. Right? Is the market actually allowing you to scale in? Because for me, scaling in, I need to be able to see a swing point form for me to actually enter another trade and have reasonable, logical risk behind it. What's my bias for EU? I'm basically flat. I mean, when you look at this, do you really have an idea of where this market wants to go? It's been sideways since the 29th. I mean, if you want to flip a coin, go for it, but usually when it's a coin flip like this, when I don't know which direction it's trying to go, I don't do anything. All right? And I wait it out until I get cleaner price action. Even all the way back here, this market hasn't been easy to trade whatsoever. Okay, I'm looking for conditions like this, where, the price action is clean and is actually moving in the direction that I want it to move. I mean, you can look at the watch list, but I don't trade the majority of these names. I just use it for intermarket analysis. So I'm not trading all these names. I'm probably trading 4, if that, 3 out of all these names. But what I do is I use it to tell me when the markets are in sync. So when the dollar is moving in one direction, I want to see all the other markets moving in sync with that. So if the market is down 0.5%, I want to see euro up, 0.3%, 0.4%. I want to see pound up. I want to see New Zealand dollar up. I want to see Aussie dollar up. But sometimes when you see dollar down 0.5%, you'll see euro up 0.5%, and then you'll see New Zealand dollar and Aussie dollar down 0.5%. And then the euro trade doesn't really move from that level because the markets are just not in sync. Guys, I can't increase the stream quality. All right, it's on the highest setting, and that's pretty much all I can do. So why are we here when NFP is got numb and U.S. government is closed? This is more of a lecture than anything, guys. I'm not trading right now because I already talked about the target that I had last week, right? But I'm not going to sit with you every single day. This is where you need to do the work. All right. If I give you a target, how many of you guys capitalized on it throughout this week? How many of you guys flipped your bias throughout the week? All right. So you have a start point and an end point. So my starting point last week, this is what I gave you guys, right? And you guys can go back and watch the stream on YouTube. You know, I talked about it. The ending point is all-time highs. But what did you guys do in between that? Right? I can't sit with you and hold your hand. Nobody's going to be able to sit with you and hold your hand, by the way. I do have a private mentorship, but I can't sit with them 24 hours a day. All right? And I can't be in your head for 24 hours a day. I can't tell you this is how you should be thinking. This is how you should be operating in the markets. That is all part of the shortcut that you guys are expecting. Right? Because it did go to the liquidity level. But how many of you guys were looking for shorts earlier this week? Right? How many of you guys were in longs and didn't hold or didn't abandon the bias as this market was trading lower into this daily fair value gap? And then you're not able to take advantage of the run when it ran higher. Okay, so this is everything that I can't sit with you guys. I cannot sit with you. Nobody can sit with you, really, unless you're sitting next to me on my desk. And even then, I probably wouldn't want to sit with you for 10, 20, 4 hours a day. I'm not doing that. All right. Because there's no shortcuts to understanding market. You have to make these mistakes, and you have to actually listen to what I'm telling you. All right. You should have a journal, and you should go back and review this week. Just because, let's say you had a losing week because you were trying to go short, whatever, blah, blah, blah. You should not be beating yourself up about it. All right. You should be coming to the markets from a neutral standpoint and say, this is what I did wrong. All right. This is what I'm going to put in my journal. This is what's causing me to self-sabotage my trades, because self-sabotage is an extremely bad thing in trading. Right? You have a plan, which I gave you guys the plan last Friday. But how many of you guys are in the markets looking for things on the low time frame that you think makes sense, right? Because if I go back to this price action from earlier this week, you could look at all this and be like, oh, there's, this is a really great opportunity to short. I'm trying to short. And maybe you're shorting all the way down to the low, and then you're continue trying to short, and then it just goes to the target that we originally had. Whereas if you just waited patiently for this one day, you would have made all that, time worth it. All right. So for me, I'm not trying to trade every single day. I'm trying to find the opportunities, and I put size behind, and I can turn that 1 to 3, 1 to 4 trade for the week into 1 to 7, 1 to 8, because I'm able to scale into it and manage the position effectively. All right. All you need is 1 to 2 good trades a week, guys. Because I've been in the position taking 25, 50, 100 trades in a single week to come out flat or break even. Or sorry, flat or negative, right? Where if I just took one good trade and spent way less time on the charts, I would have made so much more money. No, you could still trade during a shutdown, but it's Friday. All right, so you have to look at this weekly candle and think to yourself, all right, how much more does this candle actually have to go? All right, to me, the candle's already expanded to where I wanted it to go. Next week is a whole different story. Okay, next week, we could possibly see a retracement lower before going higher. All right, so next week, again, I'm looking for somewhat of the same. If it trades lower to start the week, I'm looking to position myself in here for a run higher. Yeah, so we had a 1 hour engulfing candle here. So 1 hour engulfing candle after taking out previous day's high. I don't know how much further this thing is going to go though, because we are still in a bullish trend. So is it going to go to the previous day's low? I don't know. It might just go to these intraday lows here. Don't I need to be on the charts to not miss scaling? No, not really. Let's say if I'm trading an hourly chart. I only need to check the charts at the end of every hour. I don't need to change every single hourly candle form to scale into a trade. Right? Let's just say you wanted to go long because we had this afternoon lunchtime low. All right. So let's say you went long in here. Let's say you went long here and you're targeting previous day's high. No, let's just say you want to use like this hourly low. There's opportunity to scale into this trade on some of these other hours. So let's say you get a nice candle like this. Now you get an hourly pin bar like this. Now you could move your stop loss here, add to the trade. Let's say you have 0.25 R risk on. You add to the trade and you put another 1 R on. All right, there you go. But I don't need to sit in all of this and watch every single one of these hourly candles form. I just need to check at the top of every hour. Even if you wanted to enter, somewhere on this candle after you get the hourly pin bar, and then you want to put your stop loss at 50%. That's fine. You don't need to be in front of the charts watching every single hourly candle form. All right. And this is what I did when I was at work, when I was still working a job. I was trading the 4-hour time frame. So I would just check at the end of every 4 hours. And I was swing trading those. But knowing that I might be in that trade for 3-4 days, if not 1 to 2 weeks, holding that trade. But let's say if you're going to be in a 2-week long trade, do you want to be sitting there and watching the markets for 2 weeks straight? You're going to lose your minds. You're going to lose your mind. Well, it really depends on the time frame that you're. All right, it took me a while. What time frame I'm trying to trade? Now I'm comfortable trading really any time frame, other than like the super low time frames. I don't really trade those. They just have different time horizons. So if you take a 15-minute trade, you're not going to be in that trade for. All right, but if I take a 4-hour or daily trade, I might be in that trade for multiple. So I took the long out of 8 on this day. Here. The exit. All right. This is, time of day is if your trade is going to run in your favor, and this trade pretty hard, it ran, 500 ticks, and trying to hold that open. I don't know what to tell you. The very intraday trade, it was just overnight, right? Because we're already above the liquidity. But these are all decisions you have to make on your own. If the time frame would next week be on the bearish side? Well, look at the weekly candle. This is bearish. This is even if the 4-hour, 1-hour closed bearish. Bearish. It's creating a higher. That to me is not bearish. On this week, Friday and Thursday might have been bearish. Does that mean it's bearish? No, it closed bullish on the week. No, NFP is not. I already answered that. What do I use poker chips for? It allows me to just not overtrade. Right? Which was a habit builder. Because I had a big problem with overtrading. So what I started doing, I started putting poker chips on my desk, and I said I wanted to take 5 trades a week. Right? 3 trades a week. 3 really good opportunities. There's going to be 1 or 2 days where I don't want to trade. This is all I have, really. So let's just say you have 3 trading ideas. These chips you might and trying the same thing. But this allows you to stop over trading and to stop having so many different ideas about the market. Because I know what it's like, and you see these markets moving up and down. How to don't know opportunities because it feels like a slot machine. You sit down in front of the charts and you showed up. It means that you have to take a trade. Do the opposite and this. And even doing this took me a very long time. Like I said, I wanted to take 2 to 3, and it almost took me 3 to 6 to actually do it. Right? I would still find myself taking 5 trades, and I would look at my journal and be like, "What am I doing?" If I just took 1 trade and ended my day, I would be up 3R on a day in the markets as soon as I close it. My internet is good, guys. I cannot help you for what this video resolution is on the highest you could possibly go. We've been losing a lot on NASDAQ. It's always been manipulative on the 1 minute, to be honest. It's very dicey. So I'm only going to stay on here for like another 5 minutes. I would be very cautious of trying to continue long on NASDAQ, though, for the day. But I also am not leaning short. What I'm going to do is wait to trade back down into this fair value gap or leaning long again. So in enough days to get down here and then position myself again. So I'll answer any last question. But I'm probably gonna hop off here. I do want to say Ticks or Funding Pips is gonna make an Instagram story for a couple giveaways, and I'll list it out right now. Second. So they're going to be announcing 21 on Instagram story and Twitter. So 10 accounts. I think Funding Pips too, but they are going to be in Instagram and Twitter. So I believe if you're just tuning in, you should be able to check that. It's probably just going to keep continuing higher, in my opinion. As long as, structure is still in place. Okay. Creating higher lows, higher highs. And this trend is your at the moment. How 4K maybe? Even higher? Coming out of this very large consolidation, so. Yeah, I do have max daily loss limits. Max daily loss. You're not doing something right. If you don't have loss limits, you are not doing something right, guys. Could be very interesting. I think if we where we are and what index, this quarterly chart is still bearish. And I think it will get down to this level. Take some time, I think. It's going to take time. So, make sure you check out our Instagram story and Twitter for the winners. And I'll see you guys all next week. Don't just tune into these streams for entertainment, because I'm trying to share with you guys knowledge that would have so much throughout my career. How to have one idea and right, because with this idea on NASDAQ, right? If I had this idea in mind that I was going to trade to this liquidity level, I just need to make some Monday and Tuesday, right? Because this is really weird. Because if I'm bullish on a market, why would I want to short opportunities, even though there are market, right? I'm not sure what. So if you find this one trade, let's say you were able to around here, this engulfing candle, maybe your or let's say you use the hourly low. This one trade, if you maybe you're able to scale in and you have targets, 5, you're able to scale in as this next hourly candle, you're probably able to move your stop loss to break even. Right, that week you need to trade for the rest of the week. All right, but again, rewind the stream, rewatch. Quality's better on the upload. Down everything that you're struggling with. All right, are you struggling with not sticking to your plan and your bias? Are you struggling with not knowing what you're doing when you sit down in front of the charts? That is a huge problem. What you want to do every single time you sit down in front of the charts. And if you don't know what you want to do, you should not be sitting in front of the charts. Okay? I don't even open my chart with the taking a trade. All right? Because I'm trying to discipline myself, and I'm trying to victim to that temptation of risk when I don't know what I should be be doing that specific day. All right. So I'm going to hop off here. I hope you guys have a great weekend. Take care.